Blackrock and Fidelity have finally dethroned Grayscale. After just 12 days of trading, the two firms own over 107,000 Bitcoin, worth over $4.6 billion. These ETF issuers were on pace to gobble up over 13 times the daily supply issuance of Bitcoin after the halving. Can you say supply squeeze? Plus, German authorities seize 50,000 Bitcoin and learn Elon Musk's thoughts on AI's potential to hack Bitcoin. Stick around for this one. Welcome to the Tuesday, January 30th edition of the Bitcoin Daily ETF Show. I'm Dante Cook, head of Swan Business. In this show, we discuss the latest news, events, winners, losers, and key information surrounding these historic Bitcoin ETFs. Here at Swan, we're on a mission to educate the world about Bitcoin. So please like this video and subscribe to the channel to extend our reach and to help us cut through the noise here on YouTube. The moment we've all been waiting for.
9, 10, 11, 12, 13. Oh, they got him.
Oh my.
Giannis finally getting called for a free throw violation. Honestly, that was 12 seconds, bro. You can't even be mad. Like all fans waiting for a Giannis free throw violation, after 12 days, GBTC was finally dethroned by Fidelity and Blackrock, whose inflows outpaced GBT's outflows for the first day since the ETF started trading. GBTC had 190 million in net outflows, and you can see those numbers are quickly tapering off. This is after just 3 weeks of trading. There were many people who expected this capitulation to go on for much longer. Blackrock and Fidelity now own over 107,000 Bitcoin, worth over $4.6 billion. They both also collectively hit a new milestone, surpassing GBTC in trading volume and becoming the liquidity kings in the new ETF market. For day 12 flows across all ETFs, we saw an inflow of 256 million. For context, that's 5,919 Bitcoin bought by these ETFs just yesterday alone. That is 6.5 times more than the total Bitcoin issued every day through the mining block rewards. Following the halving this spring, this will represent more than 13 times more Bitcoin than is issued per day. In terms of institutional holdings, these 9 Bitcoin ETFs sit behind just MicroStrategy and GBTC for the largest institutional holdings of Bitcoin in the world. But let's take a step back for a moment and zoom out. The momentum from ETFs is clearly bullish. But to put it into perspective, the Bitcoin held by these ETFs is still a tiny amount of the total overall supply. Inflows from these ETFs still pale in comparison to the size of the Bitcoin held by whales and long-term hodlers out there. In other news, German authorities have seized 50,000 Bitcoin from 2 suspects who were involved in a money laundering scheme from a German piracy site. Here is point 5,095 as to why Bitcoin is worse for criminals to use than plain old cash.
In the old days, I'm a bad guy. I meet you for lunch. I have a backpack full of money.
Oh.
And we sit down and I walk away. You're like, hey, Mark, you forgot your backpack. I just keep walking and you look inside the backpack. It's full of cash. You're like, oh, Mark needs me to do something. Okay, great. Not traceable. Bad guys doing bad stuff. Here's the thing. When our government sent money to Ukraine sends it to FTX on chain. FTX sends it to Alameda on chain. Alameda sends it to shell companies owned by SBF on chain. Then he makes donations, not on chain, but to political candidates. Bad guys doing bad stuff, and we know. I can actually show you those movements. I can prove. Like if you looked up money laundering in the dictionary, that would be the picture.
And let's go back to the article for a second. Although they said seized, one of the suspects actually voluntarily sent the Bitcoin back to authorities. When we say Bitcoin is unconfiscatable, we mean it. In order for someone to take your Bitcoin, you have to voluntarily give it. And according to Elon, not even AI can take your Bitcoin from you.
You know, mathematically, we don't see any way, for example, for AI to subvert the fundamentals of mathematics and say, figure out how to hash Bitcoin easily. AI can't defy fundamental math.
Speaking of Elon, X seems to be preparing to launch its payment services, with Twitter receiving its money transmitter license in several states. With Elon's goal to make Twitter, or X.com, similar to WeChat, like it's an everything app, it's inevitable that it will serve as a payments rail. And you know what's also interesting? Tesla still hasn't sold any of its Bitcoin in the past year. Maybe we see Twitter start to accept Bitcoin payments sooner rather than later. Will Twitter's scale allow for the global adoption of Bitcoin and Lightning wallets that we've all envisioned? Let's get back to the larger macroeconomic landscape. As we approach a potential Fed pivot, let's highlight the fact that the Fed has been running a quantitative tightening or QT program for the last 1.5 years. The goal is to remove excess liquidity from the system, but that's not happening yet. According to Alfonso, or MacroAlf, reserves in 2022 were 3.3 trillion, with reserves in 2024 sitting at 3.4 trillion. Remember when we discussed the correlation between liquidity and Bitcoin's price action? The Fed will be forced to pivot to QE, or quantitative easing, if labor markets and the economy start to show signs of weakness. This is where there's a lot of controversy. On one side of the equation, jobs have increased and unemployment has decreased. On the other side of the equation, this unemployment number is based on those participating in the labor market, which often inflates the number and is often recalculated 3 months after the fact. And while the number of new jobs has increased, the majority of those jobs have come from government jobs. Again, like taking money out of your left pocket and putting it into your right pocket. Despite what you may see about a strong economy, Janet Yellen's actions may be signaling a pivot sooner than later. In 2023, the Treasury financed $2 trillion of national debt with short-term Treasury bills maturing in less than a year. Typically, the Treasury relies on medium-term debt, 2 to 10-year notes to fund the budget. But this change to the status quo may be a signal that they expect rates will fall in 2024. Why lock in 2 to 10-year rates at 4% when you can wait a year and lock in a lower rate? Even if a pivot doesn't happen as soon as we expect it to, the pivot is inevitable. Here's something to leave you with from the acclaimed Bit Harrington. Based on the 2-year moving average trend before the 4-year halving, Bitcoin is still cheap. And based on the past 15 years and the bills that I see come in my mailbox, Bitcoin is always too cheap. This is Dante Cook from Swan.com, signing off. Happy stacking.